And good morning, everybody. Welcome to the TriggerCharts pre-market rundown for Friday, March 27th, 2020. Hoping everybody's healthy, doing well. Your families are doing well. Hopefully that this whole situation is not weighing on you too heavily. But let's face it. Let's be honest. It's weighing on all of us. It doesn't matter if your portfolio is doing well or not. It doesn't matter if you have it or not. It doesn't matter what's going on. These lockdown and these incredible amounts of shortages of certain staples in our lives, it causes a problem. And I want to bring this up because it's really important to understand something. And I think it's really important to understand that when you're trading, when you're investing, you need to be clear-minded. Now, there's a lot of other things that go along with this, but if you're under any undue stress, oftentimes if you're not sleeping well, if you're drinking, these are times that you probably shouldn't necessarily be trading. And I say that with all seriousness because you are not really focused, not really sharp. So if you're finding yourself getting involved in things, maybe a little bit more concerned, trading scared, not committing, and kind of getting blown out of trades left and right, step back for a second. Step back and simply just regroup. In addition to that, during times of volatility that we're seeing today, trade in a smaller overall trade size. The positioning is really important because the extension of volatility and the amount of actual gain or loss you can have from any trade is exacerbated in this kind of environment. So trade a little bit smaller. If you're used to trading 5 contracts on an ES, maybe make it 2. Maybe make it 3. Or if you're not feeling well, not getting enough sleep, not really focused, and maybe there's kids running around behind you, not able to concentrate on what you're doing, well, maybe don't trade right now. There is nothing wrong with sitting on your hands. As a matter of fact, I'm going to put up a poll right now. Check this out. Answer this question as I go through our disclaimers here. I want to mention that investing, of course, involves substantial risk. Past performance is not a guarantee of future results, and the loss of original capital may occur. This is for educational purposes only. It's not an offer to buy or solicitation to sell any security out there. I want to make that very clear. That is only for discussion purposes here today. A little bit of training on some of the indicators that we have at TriggerCharts and why we use them and what we find to be very beneficial for not only traders but long-term holders to understand when you should actually think about either trimming positions or adding to them for your longer-term hold portfolio. So let me go through a few things. We're not going to have the camera on today. I'm a little tired. To be honest with you, it's been a long week. We have a little bit of something going on with the internet, so I didn't want to totally bog it down with the video today, so we're just going to kind of focus on this. So where are we right now? We've gone from absolute agonizing fear to the fear of missing out. Look over to the right on this particular chart. Take a look at this, right? What do we have? We have a massive move down. This is a weekly chart of the S&P 500. Just a straight vertical inverse parabolic move to the downside, and then we get down to the lows Monday, and then all of a sudden Tuesday, everybody says, hey, you know what? Maybe it's a good time to buy. We saw about a 20% rally from the bottom where we saw it here at the on Monday. I believe it was Monday, maybe even Tuesday morning early, up to the top where we saw yesterday. Just an incredible move on the markets, and this is what I'm talking about, these ranges. We get about 60% of people that voted on that poll. Everybody that's listening, go down to the poll and click the button. And we're asking whether you're buy or hold or selling. What are you doing? You're a buyer, you're a seller, you're trading. We'll keep it open for another 2 minutes, but make sure down on the bar on the bottom there should be something that popped up about a poll. So make sure to do that. I'd just like to really get a good grip on the audience and what everybody's doing. Okay, so we got these wide ranges. We got traps everywhere. You got bull traps, you got bear traps. You have a lot of problems when it comes to really understanding some of these levels. The other thing I'm going to show you in a moment is a lot of charts have seen technical damage to a point where you can't utilize necessarily the same chart that you've been using. Now, if you're using intraday charts, like 30-minute, 10-minute, 60-minute, whatever it is, those are still intact because you really don't have any ranges outside of there on the near-term chart where you're looking at. What's happening is the longer-term charts, your dailies, your weeklies, your monthlies are really skewed right now. The problem has been that we had such a sharp decline in the levels There is nothing like a moving average. Some of our altimeters on a very a longer-term basis, like especially daily, they're out of whack. We need to kind of move over to the weekly levels to find where we are. And the reason why we do that is we want to look at longer-term trends and find out where those levels are. Other charts like momentum indicators, whether you're using stochastics or maybe even things like a MACD or our aileron, those are still intact. You could utilize them because they're really based on momentum rather than absolute either levels or levels that combine with volume or any other moving averages or trends. So when you look at those work pretty well. All right, 1 minute, we're going to close that poll. So anybody that hasn't already done so, please go over there and check it out. We went from the worst hit stocks, seeing that the hotels and the cruise lines and the airlines and many of the leisure and hospitality areas to some of the more aggressive mortgage, hybrid mortgage REITs, the banks, were the greatest movers up this week. Now, that should have struck you as a little bit concerning. When you see the quote-unquote crap, garbage, most unloved starting to move up, you have to put in your mind that's a short squeeze and that there is a limited potential for that to continue. While we did see a nice pickup in other stocks like the leaders, the core companies like the Apples, the Amazons, the Facebook to a degree, didn't really come up that much Facebook. When you look at the big companies like that, you have to say, well, okay, what are they doing? Nothing is compared to what we've seen in some of these other stocks. This is a traditional and by the book bear market rally that we saw over the last few days. They're violent. They scare the crap out of short sellers, providing even further fuel for short sellers and buyers to come in, cover, and to get rid of their positions, thereby chasing the upside. And that's why these moves are so violent. Now, I'm not going to tell you whether or not we've hit our lows and we're going to stabilize from here necessarily. You could make that decision on your own. My opinion, for what it's worth, is that if we track any other recessionary period, whether it's based on an occurrence that's due to a financial shock or a war or anything else that comes along, the pattern pretty much holds that we see significant downside, we see an exhaustion point for selling, people buy in and those are the weak hands, and then we see another retest of the lows. There's a lot of optimism because we got the Fed in there buying everything possible between muni bonds and corporates and treasuries and flushing the repo markets with massive amounts of money, trillions and trillions of dollars. I think the Fed's balance sheet hit $5 trillion yesterday. There was more QE done in the last week than the entire QE that was the second round of QE back a number of years ago, just in 1 week. So no wonder why you're seeing this liquidity squeeze over. All right, let's talk about the polling here. We got about 82% people in. So we got buyers at 17%, selling at 17%, holding at 28%, totally shell-shocked, 0. Either you didn't want to admit to it, or this is pretty good for our group, because you shouldn't be shell-shocked. If, in fact, you're following the patterns and the protocols of what we've laid out in these indicators, you would be sitting pretty. Just look at this chart right here. We got you into a weekly all the way up about $315. You just closed it this week about $230. Not too bad. So the short would have been really doing very well. It called it perfectly on the S&P 500 on a weekly basis. We'll look at some other charts in a minute. And trading is the winner with 39%. Congratulations. Golf clap. That's awesome. That's what this market is all about. Because even if you are a buy and holder, if you will, trading around the edges is the way to do this right now. If you want to hold on to your core equities or maybe lighten up on them, but even no matter what, you want to hedge into it, you want to move out of it, you want to trim a little bit, you want to add to a little bit to it. And then outside of that, look for some themes that could play well. I'm going to talk about a couple of themes that I've been talking about for the last few weeks in a couple of minutes. So we moved from oversold to overbought. Well, not really overbought terribly, but let's take a look at this on the KRI and see what it looks like right now. So oops, let's go right here. So you can notice that we're a little bit on the, getting to the oversold, but not much. We're really very close to equilibrium. We saw this incredible, this was a great, we've never seen this before. I've never seen all these magenta purple colors before. And that's really important because when we look at this and we see that, you have these levels that are coming up and you have these magenta, that's an oversold level. And oftentimes they'll pop up from there. You got a couple of them here, 3 in a row, didn't get any reprieve, and then actually this kept it going down. And one of the reasons that you saw that was we didn't see any kind of relief with the numbers. Now all of a sudden, the last couple of days, we went at the 0 level to the +1, which was really interesting because that showed us that that was an exhaustion point somewhere down here. Now this particular time in the life cycle of trading and equities and investings is a little bit different than we've seen for, I don't know, definitely since 2008, probably back to 70 in the late 70s, mid 70s, late 70s, and then back to the great crash in the 1930s. This has been really reminiscent of that, and that's the only analogs that I can see that you can really use for this. But we're getting, as I said before, this level. So what did we do right here? Close of business yesterday, took a short position into the rise as we saw this as a dead cat bounce, a major retracement of the loss from what we call 220 to 260, about 20% retracement of that loss. Pretty much by the book of what we've seen before in other scenarios. Let's go back here. So one of the reasons we saw this happening this week, we saw credit concerns dying down, and we saw that the Fed is basically buying everything. Trillions of dollars coming into the various markets to unleash the problems or unlock the problems in the credit markets. And that's not only here, but it's also in other countries around the world. A total about $5 trillion of stimulative action and daily announcements of more to come have been implemented. And that really, let the market say, wow, maybe if we don't have so much problem in the high yield area, maybe if we're seeing some of the issues related to the mortgage REITs and backstopping of money markets and flushing in of QE infinity or QE unlimited, maybe that's going to be really helping us out. So that's what kind of happened. So where are we now? We go, the stage of investor sentiment in down bear markets. We have the dread, the realization, the rebuild. So I think we've gone through a little bit of the dread here. Then we're going to get a little bit of a layoff, like I said, and the realization is going to come in. The longer this virus continues to be an issue and we continue to see an uptick in overall, increase in the amounts. We're number one now. Once again, U.S. is number one. Yeah, we have the most amount of people. Now you say, well, that's because of testing. That may or may not be. South Korea is doing a great job at testing. I don't know what's going on with Spain. If they stop testing, and Italy, who knows? But the fact of the matter is we're seeing a major amount, much more than was anticipated. The good news is our mortality rate, as we see it right now, is much lower than that of many other countries. Italy's almost at 9.5% mortality. That is just horrifying. So when we look at what's going on right now, I think we're somewhere in the dread, going to realization, and realization is not good, by the way. Realization, we got to get to that bottom point where we realize, you know what, this is a lot worse than we thought. And then we get to the rebuilding part when prices get so ridiculously inexpensive that it becomes just absolutely intolerable not to own these stocks for the long haul. So there's going to be some bankruptcies. Yes, there will be. Cheesecake Factory says it can't pay rent as of April 1st. Mall operators having a major problem. Doctors' offices. I've talked to several of my with clients and friends that have major doctors' offices. They're laying off tons of people. Hilton's laying off tons of people. Commercial REITs are going to be big problems right now. Recession chance, 100%. I don't know if anybody doubts that, but I think that's a pretty solid estimation of what's happening. So the stocks are repricing. We ran some numbers and did some work last night on what is the potential price target for the S&P 500. And I will tell you, even in the best case scenario, it's not here. If we utilize a recession level price multiple for stocks and keep the current earnings for the S&P at where they are, we're still talking about maybe 2,100, 2,200, maybe 2,300 if you're lucky. If you cut back earnings by 10%, and even if you push your PE and your multiple up back to about 14 from about 12, you're still talking about 2,100. And let's not talk about the other side, how bad things can get. So unless this ends very abruptly, there's going to be some pain. Yes, there is a lot of money being flushed in by the governments around the world, and stimulus is coming and unemployment benefits, etc. But you got to really stop for a second. If you haven't done so, try to visualize the potential for when, in fact, we do, quote, reopen for business, which is it going to be April 12th? I don't know. If we do, are consumers just going to go back out like they were before and pretend that, hey, you know what? Let's party like it was 2019. Doubtful. It's going to take some time. It's like an old diesel engine that's been sitting in the garage for the last 20 years, not started and trying to get that thing cranking again. It takes a little more than just a turn of the key. A little massaging, a little bit of, cranking the maybe a little primer. So there you go. The bigger question is right now, and I'm spending time on this today, the charts. I think it's really important to understand this. The bigger problem today is, what is the E? What's the earnings? Company after company are pulling their guidance, and that's a real problem. And when we're looking at this to try to figure out what should be the proper price of a stock for those of us that are utilizing fundamental and technical analysis, the fundamental analysis is pretty much out the window. The good news for you is that you have the ability to use technical analysis, and especially through our indicators. And I'm mentioning this right now because you can go over to TradeStation and check out all of our indicators, anything that you see here that we're using today, 10-day free trial. And more importantly, if anybody a new subscriber comes in, just let us know. Send an email to support@TriggerCharts.com. That's support@TriggerCharts.com. And we will send you a 4-hour training course that's online that you can view at your leisure. And you have plenty of time now that we're all locked in our houses, right? Especially for the weekends. So what a great time to get educated on all this. I think this is really an important time to really refresh, reflect, and renew. This is the time for you to really sharpen your pencil, sharpen your game. For when we come out of this, you're going to be, that much better off. So last week there was no safe harbors. This week everything was bought. I think, again, I wrote this yesterday, too far, too fast, last week and this week. So the question is, what are you using for your hedging strategies? You're going to cash, shorts, and then using whatever you have in your portfolio to actually trade around that. Economic reports, unemployment rate probably going about, 10, 15, 20%. We saw a 3.2 million mark on the initial claims last week. That is going to be probably at least at that level or going up over the next few weeks. A lot of people couldn't actually get to the claims office. So we have an ugly output there. So let's kind of go through this. We're going to talk about Boeing today, Zoom, Guild, AHPI. One of the things you want to look at right now is thematic plays. And I kind of wrote those pretty much all down here. And I'll try to go through very, very quickly the themes with you. Do me a favor in the chat. I'm going to write the word here. See that in the chat? Should be a little something flashing on your screen. Open that up. Type in some stock symbols that you want to look into. We may go a little bit extra today if we have to. But I want to make sure everybody is really solid. I'll mention one other thing. If you are interested, we are doing after-hours Q&A on Mondays and Wednesdays, each and every day. That you go over to thedisciplinedinvestor.com. Thedisciplinedinvestor.com. Just put your name in the pop-up, and we'll send you an email on how to get there, okay? All right, with that, I wanted to look at something else, and then we'll come right back. This is right here. Interesting. McClellan popped to 200 plus, the highest we've seen in, let's see how long that is. The highest we've seen since, well, you would have guessed it, the beginning of 2019, after we got off those lows, those dramatic lows. We hit those lows again, even lower, negative 350. Then immediately drove right back up. And oftentimes what you see is kind of a little bit of a move, and then we start seeing it declining again over time until it can get back to normal. We also see the spearmen start pulling up. Interesting that we're seeing this, I think. We got those lows again almost every time when you see these levels. there is a, right about here, there is a significant low, and then when we turn, when it starts just moving up ever so slightly, we start to see this pick up again as well. No magic to this, just simple, statistics in there. If you go over here, I'm going to put this to some couple of people asking this. Let me put this in the chat, and then we'll go through this. If you go here, I think I spelled it right. The Disciplined Investor. If you go to thedisciplinedinvestor.com, I think you can click that in the chat right now. You can go either at the pop-up or the bottom right of the homepage, put your name in, and we'll send out an email probably this weekend about when those are. So make sure to sign up there. All right, let's go through a few of these. Here we go. So it's first going through, well, let's just go through SPY for a second, look at daily. We're seeing that there is a change in the, we saw this really harsh level of momentum on the downside, and we kept on going and going and going. We're starting to see that it's starting to pop up here. That's really good. Now, it's probably going to roll down if markets don't hold up today. We'll look at the SPY. We saw a 30-minute long alert on a 60 and on a 240. It's been short for the last 4 weeks on a weekly and 12 days, and that's why you got that short on a daily right about 281. Now, some people may want to look at this to wait for a new altimeter to be drawn. These are the 3 lines, the green, the cyan, and the red, before you actually get out. And that's usually how this plays out. But in this kind of market condition, as I told you, there are such wide ranges. Oftentimes what you really should be looking at is seeing when you get a peak pin down and then a reversal day, like we saw a couple of times here. Could have been any one of these, finishing towards the top third of the day. So when would that have been? If we see this move down, could have been here, but still that was pretty close. When you start getting really wide ranges there, I mean, any of these levels would have been reasonable. The reason why I wouldn't have done it on this one here, we still saw that the aileron was well below the 0 line. Now we started seeing it up towards the top, so you could have seen it. It started to loosen up, and we started to get the momentum more positive. So here, we started to see some positive divergence, but it's just the beginning of it. There really is a very tough market to call. Obviously, there's a lot of things that are playing on it. But I would, like I said, shorten up my time frames and look at some other charts. You would have seen that you would have had some opportunities. This is on a 60-minute, gotten on the long right here, 241, moved out of it at about 256, went long at about 261. And in this environment also, unless you're a really good and a swing trader that has a lot of stomach for this, I would think about short-term holdings, not holding overnight for the most part, because you don't know what's going to show up the next day. Let's take a look at Boeing. Boeing is at 172.60. We saw this major bounce off the bottom. This was interesting. You saw multiple days not able to really crack its low, and then we got a new altimeter that was drawn. So there you go. You had that drawn, and it called a long at about 119, probably a bit earlier on the shorter term. We got a trend to the upside on the aileron after just getting miserably hacked. We had a short up here, 328. Closed the short right about here, 282. A couple of days later, re-entered at 275, and then rode it all the way down to about 119. Not a bad play. Pretty simple, right? I mean, this is as simple as it gets. Easy peasy. This is why we color code it, because I personally need it that easy to deal with. I think it's really important to look at, have something where you can glance at something very easily, and in a split second or two, pick up exactly what's going on rather than having to do a massive amount of analysis. So right now you're in a no-go zone, really. I'll draw this out for you real quickly because this is a really good example of what I'm talking about here. You got a bit of a hole. See this, where we look back, all the way back here? There's nothing back there. So what's really preventing, what kind of resistance is really coming in here? Now, you have the same problem that's going on the other side. When you look at the levels of interest, right about here, and the basing right about here, one of the problems is that you have this really wide range. Look at this wide range all the way down here. So anything can happen right now. I would, again, look to take profits early on both shorts and longs, because in particular on the long positions, because we know the market itself is in a major downtrend. And as such, you want to capitalize when you can. On the long positions on a contrary or contra trade. So that's what's happening here. Let's take a look at a couple others. We'll get to yours as well. Zoom Media, thematic. This is the stay-at-home stock, is what we're using today to broadcast this. So Zoom Media has really been in play. Zoom Media has been on a great tear for a while. Been a little choppy over the last few weeks, of course, but this chart looks pretty good, generally speaking. Now, once this all is done, is it going to be over? I mean, I really didn't find any significant amounts of movement to the upside that really could be capitalized here. This is just a thematic trade. Probably if we switch this to a weekly, again, utilizing longer time frames, it's not even enough data to do on a weekly. It's such a new stock. Gilead, again, thematic, some kind of a drug to cure this. These are what's happening with charts. We have to let these lay down a little bit. Look at how tight the range from all these altimeters was. And then we have to look at how incredibly wide we are right here and here. When we came from, look at the difference in the size of these boxes. You see that? So we have a lot of volatility built in, and this is why there is a lot of potential to get, taken out of these positions almost every day or not. Now, if we look at this again, we go to a weekly. Same thing. We had a big consolidation for a period of time. And then what happened was we started breaking out, ramped up to about 80. You were in, you were out, you're in, you're out. Again, non-tradable in my opinion. We're looking for some consistency in all this. Here's something interesting. This is a stock we talked about. This is kind of a crazy stock. Another theme, ventilators. AHPI. They make ventilators, and particularly they make, interesting enough, you go to their website and you kind of look at that and look at their product line. They make ventilators that are powerful enough to handle multi-patients in a pandemic situation. It says it right there. So if you look at this, you see that there is some support about 1096. Let's kind of break this down a little bit. I think there was some other, we got some really good support in the 13 range. Then you build some lines across, you get this big move up. You got to move from about 16 to 26. Called it pretty well. And then it went down. This is a stock actually that we hold for clients, and I hold personally, just as a full disclosure on that. But this is kind of interesting. It's very wild. It's going to be very aggressive. It's very risky. It is speculative, but it's thematic. That's what we're looking for right now. Thematic. All right, let's look at HLT. This is the hotels. Hilton Worldwide did a really beautiful bounce up. Again, most of these charts are going to look the same. You got a momentum that's changing to the upside here. Hopefully, they're going to get some kind of a bailout. Jets. This is the holdings for the airlines, the major airlines in here. Thematic play. There's the cruise lines. This is Norwegian. We can look at any of them. It's Norwegian or Carnival, Royal. They all look about the same, right? Major dump we talked about last week, down 76%. Started to move up nicely from a very low base, 22 to 49. It's like an 80 or 90%, maybe 100%, more than 100% return in that short period of time. But now you're hitting right against resistance, heavy resistance right there. Let me take some of your stocks here. What do we got here? Oh, one more thematic. Of course, we can't forget this. Well, I'll mention Clorox. MJ. People are just sitting in their house. What are they doing? They're baking. That's what they're doing. Not bacon, B-A-C-O-N, but bacon as in B-A-K-I-N with a little bit of a apostrophe on the end there. Bacon. So a lot of people are thinking that, hey, marijuana stock's going to come back. People are going to really want to get there. Let's go real quickly on some of these. Pod, again, this is another company. This is Insulet Corporation. It had a major breakdown, hitting significant resistance right here. Look at that on a daily basis. Destroy your line right across. It did call for a long yesterday because it did finish right over that line. I would not have taken this trade. We did see momentum turn around a little bit right here, but in a market where we're seeing some bearish characteristics, you would think that we may need to flush down a little bit more, and we are down about, 3% today. But depending on what they do and how they work, I would really be careful above here. What I would look for really is, if we can bring this to a weekly, yep, it's just like I suspected, right at the top end of that. Look at that, right there, your top end right here. What I look for really is a break above, I would say 187 to get really excited about this. That's what I would do. All right, we're going to look at a couple more, and even though the market's open now, ACB. Aurora Cannabis. Well, we talked about that a second ago. Well, look at that, up 18% today. That's the theme I was talking about. So you take a look at that. I think there is some opportunity, at least from a theoretical standpoint, with regards to the people that want to buy this because they think that people are going to be buying. It's still below the line in shortable territory. It's been short since, where have we been short since? $1.51. Penny stock can go anywhere. There'll be a short squeeze on this. It'll take you up. But if you've been holding this and just holding this all through this, well, big problems. If you're looking for this to be like the recovery and the hope, well, maybe, but you got a long way to go. I mean, long way to go. It'll be about 1,000% on this one. DEO, Diageo. Yeah, you would think also people would be drinking and doing a few things, but we got, again, right up to that level, and it failed down. So we're utilizing the dailies as a really important resistance zone right now. They'll act a lot stronger than probably some of the support on the downside. We saw, again, because the last few days, markets have been up, that things have been moving very nicely. The upside, we did get a call to move out of the short at about 105. That was brought in at about 140. But it has not called for a new long positioning here yet at this point. A couple more we'll go through. DocuSign. DocuSign's interesting. DocuSign's down a little bit today. Really had a big problem right here. I would think this is another thematic play to start thinking about because people are going to be utilizing less. It's easier when you're in lockdown to use a virtual or an e-signature than it is to get an actual signature, right? So what do we got here? We got one more. Let's look at FXI. We'll get to you next Friday, everybody that was missed. Again, got a short here at about, what is this now? We're looking at daily. Just make sure you always look at the right chart. Got a short at about 42, currently trading around 36. You're in no man's land right now. You're seeing a bit of a change on the upside to the aileron, but that's about it. All right, we're going to end it right there. Went a little bit over today. Do me a favor, check out the Commander Series, which is what you're looking at here. The aileron, which is an add-on on the bottom. That's addition to the Commander Series. And be safe, be healthy, and be well. I'll see you again next week. Thank you so much for joining us.